Today, crypto prices react to the hotter-than-expected inflation report. The Treasury Department faces another lawsuit over Tornado Cash sanctions. And Ryan Selkis of Messari talks regulation from D.C. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Digital asset prices tumbling today following the release of the latest hot inflation report. Investors have been closely watching the data for clues on whether the Fed will continue its aggressive rate hikes to try to curb persistent inflation. Bitcoin dropped under $19,000 to its lowest level in October. By noon Eastern, it had almost fully recovered and was trading just 1% lower. Ether also found new lows for the month, but traded lower by just 3.2% by noon, and Cardano dropped by about 2.7%. Okay, let's talk about the top stories. First, the U.S. Treasury Department faces another lawsuit over its decision to sanction crypto mixing service Tornado Cash. In a blog post yesterday, crypto research and advocacy group Coin Center announced the lawsuit, arguing that the Treasury's Office of Foreign Assets Control, which enforces U.S. sanctions, does not have the authority to ban a smart contract, and that Americans have a right to use privacy tools. In the lawsuit filed yesterday, the crypto-focused think tank is calling for the removal of Tornado Cash from the sanctions list. Back in August, Treasury blacklisted Tornado Cash, arguing that the mixing service was used to hide billions of dollars in illicit crypto transactions. The lawsuit, meanwhile, claims that the ban harms U.S. citizens who want to engage in entirely lawful activity in private. Last month, Coinbase announced it was backing a lawsuit over Tornado Cash sanctions. The crypto exchange is footing the bill for 6 users of the crypto service who are also suing the agency. We reached out to the Treasury Department today, but a spokesperson declined to comment. Next, October 2022 has been labeled, quote, the biggest month in the biggest year ever for hacking activity. That's according to blockchain analytics firm Chainalysis, which in a series of tweets last night said that the total value of hacks so far this month has hit $718 million. The firm pointed out that on Tuesday alone, 4 breaches took place. In total, there's been 11 hacks so far this month. According to Chainalysis, at this rate, 2022 will likely surpass last year as the biggest year for hacking on record, noting that so far, criminals have hauled in more than $3 billion across 125 hacks. You might remember just last Friday, we told you about a nearly $570 million hack hitting Binance Coin. Binance said late last Thursday that a cross-chain bridge linking with its BNB chain was targeted, allowing hackers to move BNB tokens off the network. So-called cross-chain bridges are tools that allow the transfer of tokens from one blockchain to another. Chainalysis warned yesterday that cross-chain bridges remain a major target for hackers, with 3 bridges breached this month and nearly $600 million stolen. That accounts for 82% of losses this month and 64% of losses all year. Finally, turning to international markets, El Salvador has been hit hard on its Bitcoin bet. The country has lost around $60 million 1 year into a nationwide crypto experiment. And no surprise here, the use of Bitcoin in El Salvador appears to be low amid the market volatility. El Salvador still faces plummeting economic growth and a lot of debts. In fact, the country's debt-to-GDP ratio, a key metric used to gauge what a country owes compared to what it generates, is expected to hit nearly 87% this year. That creates worries that El Salvador won't be able to handle its loan obligations. According to data from Bloomberg Economics, El Salvador tops its ranking of emerging market countries vulnerable to a debt default. Check out the full story on CNBC.com. All right, on to our main story. The midterms are fast approaching, and the crypto industry is ramping up its political lobbying activity. Crypto World's Kate Rooney spoke with the founder and CEO of Messari from DC FinTech Week about his contributions and where he believes regulation in the U.S. is headed.
You're donating to candidates that not only support crypto, but at least are, read in on it and have done the work. Tell us about your philosophy here.
I think in a startup or corporate environment, same as down in DC, you want to have institutional knowledge that's well captured. And this is not an easy industry to come up the learning curve on, as you know. And as most people that get down the rabbit hole figure out pretty quickly. So I think it is important to re-elect some of the incumbents that have really dug in, rolled up their sleeves, learned what some of the issues are. And the point that I made in a post this morning was, even if there are certain elements that we as an industry, using the collective we very generously, but that we as an industry might disagree with certain policymakers on, it is better to work with people that are read in and informed on how this tech works. That's the only way we're going to actually get good policy. So the contributions that I made, first of all, they were bipartisan, very much focused on the leaders in Congress today that we think are going to play a meaningful role in getting good, thoughtful legislation passed in the next Congress. And beyond that, I think, aside from it being a bipartisan coalition that currently exists, we want to make sure that we don't lose that knowledge and we can capitalize on some of the momentum that I think we've seen in the last 6 to 12 months in terms of folks putting a number of bills on the table and ultimately getting things like exchange oversight, stablecoin regulation, and maybe some common sense disclosures frameworks over the line.
Interesting that it's bipartisan, that you're donating to both sides of the aisle here. Any sense of if there's a party that's more crypto friendly and if there are sort of party lines being drawn on certain issues?
As I was thinking about who I was going to contribute to, that was one consideration. It is, are the Republicans or the Democrats, better on these issues? And I think if you polled 10 people within crypto, you might have 7 or 8 out of 10 say the Republicans are better right now. I'm not necessarily sure that that's the right rubric right now. What I wanted to look at instead were who are the specific policymakers that have been thoughtful, that have shown their work in some way, shape, or form, that you can have a conversation about this tech with, and that are ultimately going to try to get a balanced approach between how do you regulate centralized services, how do you think about U.S. dollars and stablecoins versus CBDCs, and all these other kind of myriad issues. And if you're starting from a blank slate, it's obviously going to be a lot tougher to get done, particularly in this environment that's hyper-partisan, and particularly given that we are racing against the clock a little bit. You got to capitalize on the time and attention that I think has been put in and get something productive done, or it's unlikely that we'll see comprehensive legislation like we, the industry, and I think Congress and regulators, and then the country in general, I think should want to see in the next few years.
You've clearly spent a lot of time with these folks. What is the big theme or multiple themes that you've heard in terms of the biggest priorities when it comes to regulating crypto? Anything that they're hyper-focused on, regardless of party, do you get a sense that there's something that will happen first based on their priorities?
Exchange oversight, custodian oversight, and making sure that there is someone watching and regulating the large crypto institutions is extremely common sense. Regulating the stablecoin issuers and those processes, extremely common sense. These are U.S. dollars you're talking about. These are exchanges or quasi-banks by another name. It clearly makes sense to bring them under some regulatory framework. And if you ask each executive of those major companies, they're going to say the same exact thing. So I think the conversation that's being had right now is where do you draw the dividing line between centralized companies and decentralized networks? And what's interesting about crypto is it is a little bit of a gray area. And there are some decentralized networks that have some attributes that make them look a little bit more centralized. And I think the thoughtful kind of balanced approach to policy is going to be, let's solve 95% of the issue today that we can with these big regulated services, some of which are traded publicly. And then we'll get to the other 5 to 10%. But let's try to do that after more than 2 years of these technologies' existence. DeFi, NFTs, DAOs, a lot of these more exotic innovations, they're essentially 2 years old, if that. Ethereum itself is only 7 years old. So it makes sense to look at some of these older companies by crypto standards and bring them under a regulatory regime. Let's tap the brakes and not throw out all the opportunities and create a stifling environment when it comes to the startups.
Interesting on DeFi. So you think that needs a little bit more time to grow and get a little more clarity just on the industry and what it'll look like before it gets regulated?
Or better yet, regulate the edges of these networks,
okay,
not the networks themselves.
Right.
And so what I mean by that is whether it's a centralized exchange or it's a service that's leveraging one of these open protocols, but that itself is centralized and providing some service for pay on behalf of users, I think that those are fair game and obviously should be regulated. And I think it's common sense to kind of fit them under a certain oversight regime. It's when you start to think about, should we allow these networks to exist or should we crack down on these open source software protocols? Yeah. That it becomes a little bit concerning.
Have you been able to handicap the probability of something happening, say by the end of the year, or at least the second half of next year? What's your expectation for any sort of bill in Congress?
There is a low but non-zero possibility that we see some legislation between now and the end of the year, which I think would surprise some people. I think the best outcome is one where we get something in Q1, Q2, where we've had an opportunity to measure twice, cut once, and really get this right. I think much longer than that, it doesn't really do anyone any good. It creates this ongoing environment of regulatory uncertainty. But I do think the new Congress in the first 6 months of the year, there's a real opportunity to get something done. And I would actually say, for the first time, I'd say 51% that we see something comprehensive when it comes to exchange oversight. Maybe that's something like the DC CPA, which is sponsored by Senators Stabenow and Bozeman, or something out of House Financial Services, Rep. McHenry and Rep. Waters on the stablecoin side. I'd say those are the two most likely. And if not those bills in particular, those bills would probably be a very good starting point for good legislation. And like I said, 51%. Heard it here first.
Yeah.
Okay, that's all for Crypto World today, but we'll be back again tomorrow. We'll see you then.